How USA's evil strategy killed Japan's economy. Japan's economic crisis explained. Let us discuss a country with rich culture and even richer technology. Japan is a country that survived the grand bombing of Hiroshima and Nagasaki and rose from ashes to grace in a matter of 23 years. Yes, that's right. Surprisingly, Japan defeated great economic powers like Britain, France, and Russia to become the second largest economy by 1968. But an economic stagnation of 30 years engulfed this country. Today, we will dive deep into this timeline and discover the reason behind this misstep and whether the USA has a role to play in this series of events. Japan's history. There was a time when Japan's economy grew at the rate of 10% per year. It even touched 12.9%. But this golden age of Japan's evergreen economy was engulfed with the horrors of flopped fiscal policies and upsetting monetary decisions. During this, their economy touched zero and even went negative during the global recession. Today, let us explore how the USA, the leading economic power, has played a major role in sending the mighty Japanese economy downhill. The US-Russia war had worsened the Japanese economy, and the Japanese yen had taken a deep dive against the US dollar. This graph shows the historical structure of the Japanese economy. If you notice the GDP growth of the initial years, it is rather steady. Several pitfalls paved Japan's way till 1967. In the year 1967, it touched a whopping high of 12.9. This was carried forward to the next year, and a stagnant figure of 12.5 was maintained. However, this trend was painfully discontinued by the year 1979. This doomed year faced the second oil shock. It was marked by a rise in oil prices caused by the Iranian Revolution. This year, Japan faced its very first negative GDP figure after the recovery from the bombing. It can be inferred that the USA possibly had a role in giving impetus to this crisis and to the fall of Japan. Iran's refusal to supply any oil around the globe. Since 99.7% of Japan's oil was imported from Iran, Japan's oil demands were completely unmet, which led to an economic shock. The other reason that pushed Japan to the brink was its messed-up economic policymaking. The country that pushed Japan to make this terrible mistake was the United States of America itself. The pressure from the USA. Let us look closely at the yen and dollar's relationships from this graph. In 1972, it took 357 yen to purchase $1. But in 1984, the yen appreciated by a great amount, and it only required 261 yen to purchase $1. This progress threatened America, leading America to take drastic steps to stall Japan's rise in the global arena. Economic giants like the UK, France, and the US purposefully depreciated the yen against the dollar to sustain their status. At this time, Japan came up with the revolutionary technique of lowering the lending rates offered by banks for easy finance access. Due to this easy availability of funds, the exports and traders began buying lands priced high, and this laid ground for the biggest disaster called the asset price bubble. Asset price bubble. The investors started pouring cash into the property market and land, because of which the property prices soared. Traders took loans and poured the cash into buying land. The land is used to repay the previous loan. These lowered lending rates turned out to be the reason for this catastrophe, furthering the damage. To rectify this elongated evasion of land prices, the Japanese banks, in search of a quick and easy solution, did the exact opposite of what they thought was the reason behind this bubble. The Japanese banks increased the interest rates from 2.5 to 6% in one go, shocking the entire nation. This immediately baffled the traders because their heavy loans became nearly impossible to repay. By this time, Japan had already made two mistakes. 1. Lowering the interest rates, and 2. Increasing the interest rates to cover for the lowered rates and causing a fall in the value of the assets. Nevertheless, the banks did not change their course of action, furthering the country's downhill. To recover from this shock of lowered asset pricing, the Japanese government and banks made another mistake of selling off mortgaged land. As a result, the supply of land in the market increased, but the demand fell, further lowering land prices. Due to a lack of borrowers, on account of high interest rates, less cash was being invested in the land than before. Now, no bank wanted to take any land as collateral, and all the land the bank had was sold off to the public. The vicious cycles damaged the country's entire economic code of conduct beyond repair or rectification. In no time, this cycle turned into a spiral, finally shoving the Japanese economy to the ground. The Keiretsu Model. It is very important to acknowledge the Keiretsu Model to adequately appreciate the rapid growth of the Japanese economy in the early years of its 23-year-long golden age after the bombing. However, no one had imagined that the same Keiretsu Model, which helped the country rise back from the ground, would become a reason behind its downfall. This model's astonishing and noteworthy point is that it could revive a dying country. But its misinterpretation by economists also gave it the power to cause a nation's economic framework to shake and fall on its knees. Before the Keiretsu system, Japan's primary business model was the Seibatsu. This referred to small, family-owned businesses that eventually evolved into large monopolistic holdings. Next came the Keiretsu Model. This revolutionary governance model refers to the Japanese business structure consisting of a network of companies that includes banks, manufacturers, distributors, and supply chain partners. To understand this model better, let us consider the famous saying, "All companies are separate entities, and any supplier activity is isolated and unassociated with the company's status." For instance, if I promise to purchase a sunroof worth $40 from you for 5 years, but suddenly the energy price shoots up and the cost of the product becomes $50, I will still expect you to keep your end of the bargain and sell the sunroof at $40 apiece. If you cannot, I either sue you or break the contract to deal with another vendor. The Keiretsu Model is the complete opposite of this ideology. It backs every small company with a core company and a bank. All these companies take part in dealings with each other. Let's understand this model by comparing Toyota, a Japanese company, with an American company. Let's consider that both companies order from a supplier in their own country, and this supplier needs 10,000 tons of steel to manufacture the car parts that Toyota and any American company need. If the steel pieces shoot up then, in the US systems, the supplier would still have to sell the car parts at the same price. However, in the case of Toyota, if the company is already placing an order of 100,000 tons of steel, it will now place an order of 110,000 tons of steel and forward the extra 10,000 to the manufacturer. But like every other thing in the world, the Keiretsu Model also brings certain drawbacks. One of these drawbacks is easy to access to credit. Since each company is backed by a bank and the bank itself has certain holdings in that company, the company often borrows a lot of debt, leading to excessive borrowing and, ultimately, the crippling pressure of debt. Another disadvantage was that this model did not allow any young Japanese lad the opportunity to be hired by a company like Toyota or Nissan that was already involved in this model because of their long-term commitment. Finally, none of the Japanese policies was ever designed to accept or encourage any foreign investment. This led to a fall in their currency in the global arena, fetching them a lower exchange rate and further reducing the value of yen. This series of events, with a hint of the US role but a load of unimaginably naive and dysfunctional governance, led to disastrous and irrevocable economic monotony and mishap in the country of Japan. So do let us know which topic we should cover next. If you enjoyed the content, give us a like. And thank you for subscribing to our channel. See you at the next one. Bye.